Well, good afternoon. Tax season is theoretically at an end, although I'm sure there's no tax preparation offices in the country that would be able to prove that from the traffic on the hallways. However, it brings me to mind that I want to do a series of videos based on literally the material that's crossed my desk in the last 3 months, and primarily driven by the situations where there's no question in my mind that the client's picture could have been way improved if the client was better looking after themselves. And it occurs to me that clients don't want to give money to the government, and clients do want to get as much of that money back as they can. So if they're not looking after themselves, it's entirely possible that they don't know how. So I'm going to approach this from that attitude. But first, let's define who we're not talking to. Let's imagine a person we'll call Terry the taxpayer. And Terry the taxpayer makes a middle to high T4 earning income and has 1 or 2 RSPs a year. That is the tax picture that all of these non-standard, non-Terry the taxpayer situations are intended to equalize. So if you get any of these common T-slips, you're no longer Terry the taxpayer. And if you're no longer Terry the taxpayer, you have certain rights and privileges to make it sure that your employment conditions are not less than equal with Terry. Okay? I hope that made sense. It made sense in my head. So the basis of the Canadian tax system, and it's important to start with this, the basis of the Canadian tax system is that our tax system is based on the principles of self-assessment. So does that mean you can just write down whatever you want and expect to get whatever you want? Well, I think most of you have already realized that's not actually how that's interpreted. Factual self-assessment is what the government is expecting. Okay? And they expect factual self-assessment to be entirely based on facts and data. And by this I mean the tax system is not equipped, provisioned, or designed to hear out people's personal stories. The tax system is only designed to deal with the hard facts and data of your earnings and earning and tax situation, supported by meaningful, permanent record keeping. And I'm just going to go here first because otherwise I'm going to be bringing it up with every form we review. What is permanent record keeping? Well, thermal receipts, and I know you're already cringing, they are not permanent records. They're just not, right? And this has been this way for a long time, and there's nothing your tax provider can do about this. It is the rules of how things are done. So if you are filing your taxes and only not backing up those thermal records, and you get challenged somewhere down the road, there is every chance that your claim would be then rejected, and you would have to pay that money. So keep that in mind as we go through this. Nowadays there's a variety of ways to fix this. So one of the oldest things that the clients at MCR Accounting have been doing is they take their thermal receipt and they photocopy it and they fasten it to that photocopy, which gives you a whole bunch of room on the side where you can write notes to your tax preparer and notes to yourself, and it's just a real neat manual but neat way of doing things. And honestly, when it comes to financial hygiene, neatness is a big part of getting it right. So nowadays, and I'm not here to sell products, but nowadays there's also a lot of more modern ways to approach this, including entirely cell phone based inputting of record keeping and scanner based inputting of record keeping. So you can explore some of those things yourself, but just understand that one of the things you absolutely cannot do is count on this permanent record being your thermal receipts, because those rulings have already gone through, right? Those challenges have already been made and already been lost. So I don't want to discourage anybody from challenging the CRA, but challenging the CRA on decisions they've already made is about as likely to succeed as challenging your mother when you were 5 years old and she told you no. So it's just not going to happen, is what I'm saying. Let's stop thinking that we have that path, because we do not. So let's move straight on. What are the types of people I want to talk about? So I'm going to talk about the people who are not Terry the taxpayer. So if you live where I live and you're any kind of a wage earner, you probably are eligible. Well, you are eligible for the benefits of the T2200 Northern Residency deduction. If you collect a Northern Residency deduction, you are not Terry the taxpayer. You are collecting that in order to bring you up to equality with Terry the taxpayer. So that's important, and I just want you to remember that, because we're not going to deal with the 2222 right now. It's too regional, doesn't include enough people. We're going to do that next after this. I want to do this, the T2200 first. Okay, so if we can just move on to that. All right then. So here we are looking at the Declaration of Conditions of Employment, commonly known in the biz as the T2200 form. You will note that there is a special T2200 form this year and last year because of the COVID situation. So do understand that if you've got one of these forms, that's a temporary thing. It won't be a permanent part of your life. I'm not going to cover that in this particular video because it was a very simple formula and there wasn't a lot that people could do wrong with. Okay, so we were talking about the regular T2200. That form has been around for a very long time, and it is applied to certain types of employees for a very long time, but it is recently becoming far, far more common, at least in the MCR service area. I can't speak for other providers, but we're seeing a lot of these. I think I understand why we're seeing a lot of them, but I need the employees now to know how to get the most of it. So in this particular area, I'm just going to quickly cover some stuff and then we'll see how it fits in the form. In this particular area, the two things that are most often going to be driven by this form, outside of the more normal things pertaining to commission salespeople, is trucks or vehicles and cell phones. And there's both problems and issues with both of those things. And that's a big part of why I'm here, to try to help you get what's owed to you, what you have a right to. And part of that is first understanding this form, because I'm going to tell you outright, as a person who has gone through literally hundreds of these in the last few weeks, employers are not necessarily the experts. So don't just blindly trust that your employer's bookkeeper filled this out properly. And I want to make a note for employers. Let's stop there. Employer's bookkeeper filled this out properly. Do you know how many of those I've seen this year? So as employers, and I'm hoping I'm reaching out to both employers and taxpayers here, because this is super important. This form is supposed to be signed and dated by someone of management authority in your company. That is the rule. Your bookkeeper probably isn't that person. This is a legal document. You are bound by this if you put it into your employee's hands. So, just a piece of advice for employers. You know, MCR Accounting doesn't use a T2200. We don't have any reason to, but if we did, either me or Christina would be signing it. It wouldn't just be some employee. Okay. So, did this employer's contract require them to pay their own expenses while carrying out their duties of employment? This is the crux of the T2200, but many of us find it somewhat humorous that this question is even on, right? Because honestly, if I check this box, right, now what does the form say, right? It even has it spelled out along the bottom there that if you check that box, the entire rest of the form is irrelevant. So why? What case? And there are T2200s like this out there. My assumption is it's been a mistake. That's why I'm sharing it with both you and your employer now. That doesn't make any sense. Like, why would you have gone through all the effort to pull this? Why would you have brought your employee in? Why would you have brought this whole thing up and then checkbox no? So the assumption, my assumption will be that this is a mistake, and you as the employer should question that. The employee should question that. So first off, does your T2200 say yes on question 1? Because if it doesn't, this doesn't matter. You maybe are just Terry the taxpayer after all. Okay, question 2. About travel. Travel is a big part of this. That are you expected to travel away from your area of business? Well, let's talk about that a little bit. Let's talk about it in terms of, how about if it's a contract operator, okay? And maybe he goes to the same facility to operate 12 hours a day, every day, but that facility is not the contract operating company's place of business, is it? No, they have an office downtown. So that person has that travel requirement. They're, traveling away from their place of business. So this is often going to be checked yes. Right? Now, as soon as this box checked yes, we're heading down the road to making a motor vehicle claim. And there is nothing, honestly, there is nothing in the entire personal tax world in Canada more closely scrutinized than motor vehicle claims. Motor vehicle claims are going to be on this form. They're going to come up again and again as I work our way through these T forms, because everybody, all these various people have rights to go at the motor vehicle claims, but their rights are not the same. And that's a big part of the real problem in Canada is people are listening to things at breakfast at the Breakfast Club from people that are in an entirely different tax picture than them, and then expecting to get those things for themselves. Like, you can't imagine how many straight T4 earners come in and question us every year about how come they can't get any of these claims. You're Terry the taxpayer, you don't get any of these claims, so that's just the way that works. So, the next question, just so you know what it pertains to meals. Okay? If you're not gone for more than 12 hours, then what makes your dietary needs so much more tax-worthy than Terry the taxpayer? Okay, so the CRA wants to know two things with these questions. They want to know the specific area travel, right? So they want to, that'll give them the ability to have a pretty good idea what kind of mileage they should be seeing on an auto claim. And they want to know how frequently you would be away from home, because, and it'll be a shock to you, but the number of people that would try to slip hotel bills from their Valentine's date with their wife in here, that's what they're looking for, right? And please, I beg you, recognize that CRA assessors are intelligent human beings with degrees and education. So treat them as if they're equally smart with you, because you know how humans get when they're consulted. Okay, the next thing, and this is the next critical question, is these dates. If these dates aren't filled in, your form is no good. Indicate the times of employment during the year. Now, maybe you only work for that one, let's go back to that contract operating, and this says 2020 01 to 2020 12/31. Maybe it says that. But maybe you had several jobs during the year, and this doesn't say that. Or maybe you were a contract logger, and you had 6 weeks off during wildfire season. And then that would be in this line. There would be that break in there. So what does that mean in terms of if you are reassessed? Well, if you're reassessed, this form is going to be on the table, and your receipts are going to be on the table, and the dates that don't fit in here are going to be pushed off the table, right? It's just that logical. You can reason this stuff through. When you really go through these things line by line and look at them, they make sense to most reasoning people. So now we already established the vehicles are going to be a topic of conversation. And if this box is checked, that changes the conversation. This box is checked means that you're being reimbursed for your vehicle. But I want to talk about that because there's two ways that happens. If you're given a monthly fixed allowance, like say the company gives you $1,200 extra a month because you have to use your own pickup truck to service your service area, that money then would be on your T4 and would be taxable. That's an allowance not based on any factuality. And so if you're getting that, will want to be very, very diligent about collecting the expenses that we're going to talk about as we move down the road. The next option, and in my area, we don't see this very often, but I'm telling you, as a taxpayer, if you have a chance, if your employer asks you which way you would like, you would really, if you get a per kilometer rate, as long as the per kilometer rate is sane in accordance with CRA guidelines, and so just to give you an idea, you'd be talking 52 cents a kilometer to about 60 cents a kilometer, maybe 65 at the most right now. So I have seen expenses in here like $1.50. If this says $1.50, then pretend it's an allowance like the top one and follow all the rules I'm going to give you, because you're going to just report this then as income. But if this is, say, 55 cents a kilometer, then that can be declared as a non-taxable reimbursement. And then that is just a simpler way for you to do it, right? From a tax perspective. On the other hand, the big thing that I'm going to be asking you to do is what your employer is now going to be asking you to do in order to give you this reimbursement, because they're not just going to let you make stuff up. So then we move down into company vehicles, right? So what happens if this box is checked? Well, if this box is checked, that's, in our area, this was a lot of people had company vehicles at one time. And I believe that the reason so many people have a T2200 now is because they don't have those company vehicles anymore. If it is a company vehicle, then all the rules that we're going to talk about are still in effect. Just the person liable for proving all these various things is the employer, not the employee. That means that there's a relationship between the employer and the employee, though, because, just like your tax preparer can't imagine what this looked like out of thin air, neither can your employer. So again, we're slowly starting to get a picture that if there's a vehicle involved in the conversation, there is a vehicle law. To be quite frank, you can try to get around it, you can try to keep records some other way, but really, it's a vehicle law. And that includes, if you happen to have a company truck, then your employer. And I worked in a place that had hundreds of company trucks. And every year I would listen to the guys that had company trucks, considering this whole thing so unreasonable. But you know what? A lot of companies have just gone the other way then. Now they check this box. Okay. The next one has to do is if you have a company truck and you had to pay the expenses. Now I got to be honest, I don't know of this case, but obviously there are cases because it wouldn't be on here if there weren't. So if you have to pay all the expenses for a company vehicle, what that means is you're going to want to record in a factual, permanent way all those expenses. But you won't be recording the capital cost allowance for the truck, and you won't be recording the cost of the truck and the depreciation of the truck and things of that nature. Those expenses will have to be quite specific. They will have to be listed down here, and they will have to be totaled out. They need to be reimbursement type expenses. Right? So again, that means that you're not trying to prove them to the CRA now, you're trying to prove them to your employer. Right? Employers are, in our area, they appear to me to be opting out of this altogether. Right? It's just getting people to cooperate. This is way more difficult than you could ever imagine. So the next question, question 6, did you require the employee to pay for expenses which they did or will receive a reimbursement? If this is checked yes, then this is again reimbursement money. And reimbursement money can potentially be non-taxable if it's done properly. So in this thing, we're expecting dollar for dollar. You provide proof and they pay you. You provide proof of credit card, they pay you, right? So a lot of the times if you have a company truck, you might also have a company credit card, right? If all you're doing is putting gas in the company truck, then this probably doesn't get filled out. So that just, we would look at the specifics if you came up with that. Now we're getting it down. This is what we've been waiting for. This is what I've been trying to get you to. This box is checked yes. If this box is checked yes, which, most of my clients it is, then this next thing has to have something written in it. And usually it'll have truck. Commonly in our areas it'll have truck. Sometimes it'll say tools. Nope. Sometimes I can type and sometimes I can't. And often it says cell phone. I'm going to talk about that in a minute because I don't really understand why they're doing that. Maybe it's habit. Maybe there's been a change in the form that comes before my time. So now you've got this in here. So let's talk about this a little bit. When it comes to specific expenses, right? Anything that's already written in here as a recognized expense, that's already a specific expense. So you can assume that if they were going to challenge it, it's been challenged, it's an acceptable thing, it's something we charge. If you're writing things in this line, then it's going to get looked at more carefully. Because, really, you could write anything in this line, right? And they're going to want to have some say as to whether the employer might think it's legit, the employee might think it's legit, I might think it's legit, my accountant that checks my work might think it's legit. That doesn't mean CRA thinks it's legit. So just be aware that with the T2200, most of the ones you guys are bringing in have this line filled out. Your entire claim is billed based on this line. If your entire claim is based on this line, then the likelihood of reassessment is high. And if you don't have the records that we talked about, it means you're not going to get the money. And there's also the chance that certain claims will be rejected. Doesn't mean you shouldn't put them in, right? Again, we don't shoot people for making tax mistakes in this country. So do the best you can, be as honest as you can, and honest mistakes can be dealt with, okay? The next question has to do with commission income. I'm going to check no here because I might have to do a whole video based on commission income alone. Just understand that commission employees were one of the earliest employees using this form, and commission employees have the ability to charge for a lot more things, some number of more things, than other employees. So if you're not a commission employee, then those things don't apply to you. So I'll go back to the caution. You're in your coffee club. One of the people that's going on about all the things his accountant's doing for him is working for Canada Life, and he's a commissioned Canada Life employee. So don't. That's not saying he's wrong. He's right for him. But don't think he's right for you because you're a wage earner. You have a T4, right? You don't have a commission income. All right. So then we get into other specific things that can happen. Were you required to rent an office away from home? Well, for most, for contract operators, loggers, usually the answer is no. However, go back to the insurance people. The answer is almost always yes. Then they almost, Canada. If you're the Canada Life guy, you almost certainly have an office. You probably come down to the next line. Also have a whole whack of employees, right? Or at least a couple. So we're going to check no to both of those because I'm trying to go through this the way we normally see it because I'm trying to drive it to the specific problems that I want to talk about. So pay for supplies directly related to their work. This is really common, and I'm happy to see it. There's lots of employers that they consider small stationery incidental and you should just pick up your own. Well, nowadays, if that's how they want to consider it, that's completely legit. But if that's what they want to do, they need to provide you with a T2200 and they need to check this box, because then you can remain equal to Terry the taxpayer. Because when they put these costs off on you, that took you out of equality with Terry, right? Because Terry doesn't have to pay for his own envelopes and letters and stationery. So now you've got that. So here, pay for the use of a cell phone is, and again, remember what I said about the white boxes versus the ones that are written? This is now a specific charge. So this makes sense. If it has it up here as well, it's drawing unnecessary attention to itself, is that's all I'm saying. So I don't really understand why people are putting cell phone in this attention-getting box when it's already been a challenged and accepted expense. So the other thing I want to say about cell phones, it's kind of changed. Cell phones don't really have much variation anymore. Most modern cell phone plans are kind of flat rate, and that's changed how the CRA changed how we can do this. Because what the CRA would expect you to do with your cell phone is the same thing that we're going to be talking about on your vehicle. They would expect you to define personal use, right? Unless you can have two cell phones. Now, if your employer says you have to have a cell phone and you go and buy a cell phone that you only use for them, and you have another cell phone and you can prove that and you have no personal use, you know, you're going to be assessed, but you're going to win your case, and that's going to be fine. But if you're, you know, more like me and just, you know, hate the inefficiencies or something like that, and I did this when I was employed, I had a company cell phone, and I had used it I got rid of my personal cell phone. So when you do that, then you have to define your personal use component. Matters less nowadays because cell phones don't really go up and down much unless there's a lot of data usage, and some of the people do have a lot of data usage. So what I would like to see from employers, if they've checked the cell phone box, but data usage is going to be a big part of it, I'd rather see them put data usage up here than cell phone, because that would give us more things that we could potentially discuss during your reassessment with your reassessor. Again, they're just people. If we can put together a good case with good permanent records, right? That's how you need to think about this. So did you or will you reimburse this employee for their expenses? Now, come on, people. I've gone back and forth in my mind on how to do this. To me, this is so obvious, and it's just so difficult for me to believe that it isn't obvious to everybody. I do accept that a shockingly few people that walk in here with a T2200 have actually read it, and that is distressing. But if you have read it, then you know that if this box was checked yes, that your claim to a tax reimbursement doesn't exist. Right? You know, you're familiar with the double dipping concept. I know you're all familiar with the double dipping concept. And again, like I said, CRA is not a bunch of morons. They're intelligent, educated human beings. They are also familiar with the double dipping phenomenon. So that's, if this box says no, on the other hand, right, then you didn't get reimbursed, then you did pay for all those things. If it said yes, then they also need, and if it says yes, just like above, make sure this is very, very properly filled in. Because if it's not, that money is going to become taxable money to you, and reimbursement money should not be taxable to you. So if you've got that, you still have a record keeping and due diligence issue that you need to practice. Okay? The next one is the home. In this year with the COVID, like I showed you the S version of the form, a lot of people got a standard COVID home office reimbursement for this. But this is generally more talking about non-COVID days. Okay, it's not that. So there are certain types of work where you need to have an office home. There are certain types of work where you have an office at home, you very seldom ever go to the employer's office, and you work out of your office home. So if this box is checked, yes. But let's say this says 15%. That's not a real claim. It's in order for there to be legitimate office expense on a T2200 based form. Okay? Because office expenses appear for other people with other employment conditions. They appear for farmers, they appear for self-employed. So again, be careful what you take in at the coffee circle. So if this needs to say at least 50% for it to matter, right? And if it does, and they check no, then again, we're going to start gathering receipts, we're going to start building records, and we're going to put in an expense claim. If they check yes, then once again, they're going to need to detail them with the exact types of expense, how you were reimbursed, and the exact amount you were reimbursed. Was it or was it not on your T4s? If it was on your T4s, then they'll deduct it from your income. If it wasn't on your T4s, then you don't have to add it into your income. So if you're in that situation, most of our clients, most of our clients, this box is checked, and some will have this. Okay, that is quite plainly a home office expense, and so we will talk about that for those people. Now we get into another. There was some special rules for commission salesmen, but they're not the only people that have special rules. Tradesmen have special rules. Tradesmen, the tools of a tradesman are not deemed to be the same as everybody else's tools, because without them, they're not tradesmen. However, if this box is checked, and they did work for you as a tradesman, and you were requiring them to provide their own tools, because not everybody does, right? Like there are mechanics and instrument technicians and stuff where their tools are all internally provided, and there's ones that provide their own. If you're providing your own, and this, we don't ask to see it because it's not really our business, but understand this last piece. If you're challenged on your tool bill, they will, at the reassessment, be requiring you to bring in this itemized list that your employer provided you with, that you filled, and then he or she dated and signed. Okay? And that beautiful snap-on rolling toolbox you bought for your garage, if it ain't on your employer's list, it's not going to go through. So that's for tradesmen. Again, if you're not a tradesman, it doesn't apply. The same conversation for apprentices, particularly apprentice mechanics. Apprentice mechanics, and I've known several. Your first few years as an apprentice, you're not being paid very much, and you're putting out huge amounts of money. Mechanical tools are very expensive. So again, all we're trying to do is make this young lad equal to Terry, if he's an apprentice. So again, if that's checked, no. Same with forestry operations. There is forestry operations where, and I've done a little bit of light logging myself. If you are expected to spend your entire day on the end of a chainsaw, then it's reasonable that your comfort level, safety level, everything is better if that's your own personal chainsaw. And that's pretty much recognized, and that's what this is all about. Okay, so now that's the form. Now when we get one of these, we do put them into your tax file, but by law, they're not actually, this isn't the form that gets submitted, this is the form that gets generated. So let's now go and start looking. So the form that you can now have a right to generate because you have a legit 2100, let's start with the 777, Statement of Employment Expenses. Okay, so we're, again, there was some employment expenses associated with like $2 a day for every day that you worked at home, etc., etc. So that would be a part of a 777X, which would be related to 2200F. Okay, so this has to be checked to open the form, and we're not going to check the S version because I want to talk about. I expect that the plague is going to be done soon, so I don't want to. The time to educate people on this was last year, and I wasn't doing this last year. So apologies for that, but we're just going to skip over that for the time being. I know most of my clients, we've already handled this, so let's move on. So travel expenses, other than entertainment expenses. So now, remember at the top of the 2200, we were talking about, are you required to be away from home? how far about, they got that general idea from your service area. How long? They ask that specific question. Okay? So both those boxes have to be checked for there to be any hope of it being claimed here. You get that, right? Like if you live one block away from the diner where your breakfast club meets every morning, those aren't legitimate food expenses. Okay? However, again, if you are a commission salesperson and you meet for breakfast every morning with one of your clients, preferably a different one every day, then perhaps their meal might be a tax deduction. So next one is lodging expenses. Back to that question. Were you required to be away? The CRA is of the opinion if you didn't need to be away from home for more than 12 hours, you didn't need to get a hotel room. You could have went home, right? So that's where that goes. Okay? Other travel expenses, be careful. Anything, again, remember that the allowable expenses for 2200 clients are specific. So anywhere one of these forms leads you down a non-specific road, just be aware that there's potentially issues there. You put something, if you put like a really big number, like say $2,000 in other travel expenses, you can almost guarantee that somebody's going to want to look at that. Okay? So parking doesn't apply very much to the MCR clientele, but if you're working in Vancouver or Toronto, I bet you see big numbers here. And I seldom see numbers there, but I bet you lots of my peers see big numbers there. So supplies. Now we're talking about office supplies here. You remember that question, were you required to buy supplies? They prefer if you separate out the stationary supplies, right, as opposed to the rest of the supplies. And certain software expenses might go in there as well. Telecommunications use, employment use of the cell phone, long distance calls for employment, etc. So now you had that claim way up top on your 2200. Now this is what you get for it. You had that box checked that you had to have a cell phone, and maybe even had data written in to that other box like we talked about. So now this is where that number goes. But this number needs to be backed by permanent records. Now the good thing about this is these aren't thermal receipts, so the records you've got are permanent as long as you don't lose it. Okay. This used to be a more particular area because cell phone plans have become very flat rate, but in our area, because cell service isn't quite as good in northeastern BC as it is in other parts of the world, but these expenses can get quite high in certain cases. So make sure they're legit and make sure that you can back them up. Salaries paid to a substitute or assistant. Now, because in the model I use, I'm pretending you're a contract operator, you don't get this. Right? Or at least I haven't seen it so far. I can envision a model where I get a contract operating job and the employer doesn't want to do anything to do and I'm accountable for covering my own sick time. Maybe people have something like that. Usually, the person that's filling out this box is a commission salesman. And same with the next one, office rent. You have to have had that box saying by your employer that you have to rent an office, and at least half of your earnings and work has to come from it. Okay. Now we talked about the specialty of being a commission thing. So let's look at some of the stuff they get that you don't get. That's really what I'm trying to show you here. Right? These are, you see up here, right where it says commission income only. So that fella talking over his eggs there, he's going to be talking about his $3,000 advertising budget, right? He's going to talk about his lawyers and accountants. He's going to talk about his entertainment expenses. He's going to talk about buying hockey tickets for his clients. He's going to talk about all of those things. And he's going to get a legitimate tax reduction for it. Because those are expenses he has to make to succeed in commission salesman. This is to make him equal to you. You don't get to charge this as a contract operator. You got to charge a bunch of other things to make you equal to Terry. Those things didn't make him equal to Terry. So now he or she's going to get these extra charges. Other things that they can charge that you can't: licensing fees, bonding premiums. Some kinds of these people have to be bonded. That can be a big expense. Rental of office equipment. If you gotta open an office, I've got two, and offices are expensive. Okay? Travel fare. Salesmen are allowed to travel. Right? This again, where you see travel costs in 777 document, they are not talking about the Hawaiian vacation you and your 4 kids and your wife went on. They are talking about, in the case of commission salesmen, the traveling you did to promote sales and business. So straightforward there. Working in the home expenses is the next thing on the form. Okay, so it is really best if you actually have a designated office. That's the first box here. But it isn't critical. There is a recognition that people may not have a home that can support that, and some space might have to be shared. So one of the things that a lot of clients don't like is this is not an all of your house thing. And even if you were on a more comprehensive form like a 2125, it still would not be all of your house. Okay? So a big part of what we're going to do is calculate what's the area of the house. Now that's really easy if you're in a 10 by 12 room, that's 120 square feet. Your home is 2,200 square feet. All makes sense. So on this, the heating bill for the home, the electrical bill for the home, water and utilities for the home, and the home internet access, those are all accepted specific things that can go into this. And you can claim a percentage in proportion to the amount of your home that is in use, right? And you know, you can't say that you're, you know, a legal assistant and you work 50% of your time from home, but your home office in your 2,700 square foot home is 2,000 square feet. You can't say that, right? I mean, you can say it. There's nothing legal about saying it. It's never going to pass reassessment. You know that, right? It doesn't matter if you convince me to say it for you, it still isn't going to pass reassessment. That's another thing is the CRA doesn't care whether you're doing this yourself or paying somebody else to do it. The rules remain exactly the same. And I don't really believe that they cut our files any more slack than they cut yours if you do them carefully, right? But you can certainly get yourself in a bind if you're not doing it carefully. Maintenance costs on that home, again, yeah, it would be a percentage. Maybe there was expenses, so maybe the first year that your employer said, you know what, from now on, 90% of your work's at home. And you had an empty room, but it really wasn't what you could call an office, so maybe there was some expenses that year. That would be legit, right? And we could probably get a deduction there. Property taxes and insurance, commission sales only. See that? Regular 2,200 workers don't get to charge their home insurance and their property taxes. Only commission sales people do. Okay? And this would be rent if you were renting some space. Okay? And then this all calculates down. I should say a little bit about these forms just so you know. If everywhere you see a gray box, that's a number that's going to pull into this form, assuming I do things correctly, from some other form. Right? And the white boxes are boxes that are inviting you to write something. So, right, you see total employment use amount. You don't write that in there, that self-populates. Just, if you do start doing these yourself, you'll want to be aware of these here. Your tax software probably won't look exactly like mine, because it'd be quite amazing if any private player was paying for a suite like this. So then you're in statement of employment expenses. Okay? And this is the basic form that gets generated after we fill out all those boxes at the top. Okay? So, that being said, let's move on to the one that I know most of you are interested in. The 777 allowable motor vehicle expenses. So, let me tell you first off, there's a T2125 allowable motor expenses. There's a T2048 allowable motor expenses. They look the same as these, but they have a different premise behind it. So this is the one for the 777. I'm saying that one more time because your tax picture is different than your girlfriend's tax picture, which is different than her mother's tax picture, which is different than your dad's tax picture. So no matter who you're talking to, if it's not your tax professional, if you're not in a meeting with your tax consultant, just assume, maybe log it as a question. Next time you're in seeing your accountant or your tax preparer, you're going to ask that question. Don't assume you're going to get the money. Don't start spending the money, whatever you do. Okay, so vehicles. This is a statement I'm going to just keep making no matter how much. I don't think there's a single thing I say in this office that annoys clients more than this statement. And it even annoys my friends when I say it completely out of context than anything else. But I'm going to say it, and I'm going to keep saying it because this is the literal truth. If there is no vehicle log, there is no legitimate, documented, permanent record. Therefore, there is no claim. Okay? And if you've ever tried to build one of these things after the fact, it can be done if you're willing to sacrifice a lot of accuracy. You won't get your maximum claim because you won't have the right records. Right? This is going to help make the fact that when I was an operator, I just drove down the street to my employer's place at work and operated, and you as an operator have to use your own vehicle, beat the hell out of it on back roads through the muskeg to operate your facility. This is to make you equal to me. But in order to do that, you have to participate in your own defense. Okay? And I want to say another thing here too before we start moving down the form. If you specifically bought this vehicle for this job, then right after we get done this form, we're going to talk about the 777 CCA form. Because if your vehicle was bought specific to your work, even though it might not be 100% used for work, there will be allowable capital cost allowances for that. And only if you fill it out. So the make, model, year, those things are important. Okay, kilometers. So you need to write down your kilometers January 1st, and you need to write down your kilometers December 31st. At the very basic. That's at the very basic, people. You absolutely have to record those two numbers. And then you need to record the actual mileage that you use driving to and from work. So if you go always to the exact same place, you can clock it a few times and then count the days. That's legitimate, and you can probably argue it and win it, but you will have to sit with an assessor and argue it. It's not the way they like to see it. The way they like to see it in your logbook is you get in your truck and you write down what it says. 1, 2, 3, 5, 6, 7. You go to work, you get home, you pull in your driveway, you write down what it says. 1, 2, 3, 5, 6, 86. Whatever. Okay? That's how they want to see it. But at the very least, you need to record your actual mileage each day used to go to work. And that should include the location. So if it has a site or somebody that you specifically see, getting a little bit away from the contract operator, operators would have this easier because, the site would have a name. But maybe you're going to see a specific person. Maybe your boss has sent you to go talk to Sally down in Dawson Creek about something or other. So that should all be recorded in your log, right? So that we can sit in front of an assessor and demonstrate with clarity that you were working. Okay, date of acquisition. Again, this pertains to CCA and how you're going to devalue this vehicle. Not everybody is filling this section out. And if this is maybe a temporary thing and they don't tend to do this kind of work, I sort of get that. It gets to be quite a problematic issue. But if this is your career path, if you think that you're going to be filling out a vehicle log on a full-time basis, you're going to stay with this T2200 work on a full-time basis, then it is worth your time to record the purchase of your vehicle. And you'll see why as we get down here. So the total expenses incurred. Fuel, well, pretty much everybody knows that fuel is a cost. But it's actually And, it'll shock all of you, but some people, are under the impression it records all their fuel. So, I'm not going to challenge it because it's not my job, but I know, I see these things cross my desk and I know exactly how the assessor's going to look at it. If your truck regularly takes 140 liters of fuel, but there's also a bunch of invoices coming up on a regular basis once a month or something for 60 liters of fuel, it would not be a broad leap for an assessor to want to know if somehow your spouse's gas receipts ended up in with yours. Am I being clear here? Right? It is not an acceptable practice to claim all the fuel bought by your family in this box. Maintenance and repairs, likewise, on the truck, right? You see how we got 3 lines here? These are for, and you might have more than one vehicle. Like maybe sometimes you do use your wife's vehicle and then all those numbers will go in this column. Maybe this vehicle blew up and then you bought a new vehicle and then it will go in this column, something like that. So everything has to be kept together, okay? So maintenance and repairs is legit. Insurance is legit. License and registration fees, in BC that's usually combined with the insurance, but it can be separate. Capital cost allowance, I talked about that. You see it's one of those gray boxes though. So that means that number would come in from somewhere else. I would have to know how to make that number come in. I'm going to show you how to make that number come in, but it's something if you're doing it yourself and you've never gone and had a professional do your services for you, these are things that can help you. And I will say that if you have complex, if you're not Terry the tax, if you are Terry the taxpayer, really, I don't really understand why you wouldn't be doing your taxes yourself. But if you're not Terry the taxpayer, even if you're just very basic, just barely not Terry the taxpayer, you should probably at least once in a while, for a gut check, if nothing else, have a professional tax preparer look at your work. So, we do have clients like that every 2 or 3 years they come in, and then in the in-between years they file things for themselves. That's a completely legitimate way of doing it. And it also helps you keep apprised of, the changes that happen every year that, we have to read them and take PD courses for them, et cetera, but probably you don't. Leasing costs, you see they pull in from another place too, okay? Down here would be things that were reimbursements. So again, that might be maybe Canada Life reimburses their agents for their commercial insurance policy or something like that. So we'd have to see that down there. Leasing expenses. So there used to be a idea out there, and it may have actually at one time before my time been based on the truth and just people have a hard time to change and they don't accept the new truth that easily. But there used to be a saying that, oh well, if you've got a reason to claim vehicle expenses, lease your vehicle because then there's no argument. 100% of your lease is tax deductible. Well, that is quite simply not true. Right? We're not going to go through this form in detail, but you can see for yourself that is not true. Right? So again, people say things sometimes to try to make you jealous, sometimes to try to make themselves seem smart. Doesn't mean it's the truth. You have a question like this. Like I don't know what other providers' policies are, but at MCR you can come in and see us any time of year to talk about this kind of stuff, right? Like we're more than happy to help you. Get to that level of financial hygiene that allows you to maximize these deductions. Because I'm just being honest, in our client base, people that are filing under a 2200, I think it would be a stretch for me to claim that anybody is actually maximizing this. And that's the reason I'm starting with it. 2 reasons. I'm starting with the 2200 is one, it's a whole group of people that think it's way more than it is. It is not a 2125, and it doesn't mean the same thing. And 2 is people have them, and they're not keeping the right records to be able to make use of the claim. And that's not something we can fix. right? Again, back to the beginning of this video. It has to be a permanent record. And I can't make those for you in March of the following year. You have to collect your motor vehicle expenses as you go. Now, motor vehicle expenses, because of the fuel bills, generate a massive amount of thermal receipts. So, you know, maybe you're a younger lady and more happy with online stuff, and you're using QuickBooks Online or something like that, and that's making your thermal receipt thing a non-issue for you, and that's great. You know, I'm hoping that as the years follow through, that there'll be a big uptake on those kind of software services. But in the meantime, at the very least, you should be photocopying your receipt. Right? Now, at MCR, we do have that service. It's a big part of our T2 service, right? Like our business accounts generally do pay for that type of receipt photocopying service. It's not that we wouldn't do it for T1 clients. It's that we've never had a T1 client willing to pay for it. It uses a lot of resources, and it takes a lot of time. The easiest thing, the easiest way to do it is for you to photocopy your gas receipts the day you get them. Staple them to the receipt, lay them in the box. Okay? Bring them to me now. That's gonna make it the best. So tax preparers, well, I'm speaking for myself, will work from your thermal receipts. Okay? If you don't want to pay to have them photocopied, and you don't want to photocopy them yourself, we will work for them. But I'm just being upfront with you with this video and telling you that when you get called in for the assessment, and this includes whether, like, we represent most of our clients in assessments, but there's nothing us being there can do to change the fact that your receipts are all thermal. And the other problem with thinking, well, I'll just quickly do that if I get assessed, is understand the reason thermal receipts are not permanent is because they were given to you made with invisible ink, right? Disappearing ink. I don't know why it is that way. Don't know why it's not a big legal issue in the country, but so be it. That's where it sits. So one last thing, and then this video wraps for the day. Capital cost allowance. I talked about that, right? This isn't as big a thing with the 2200, but I'm going to bring it up now because I have seen the case. So if you go back to the contract operator, say you moved here from somewhere else in Canada, you moved here, you've got your power engineering ticket, and you've got a job. But the catch is, it's a contract operating job, and you need to provide your own pickup for it. You came here in a 1997 Honda Civic, that ain't going to cut it, so you're going to go out and buy a vehicle specifically for your job. And I really hope the job works out for you, because this is a kind of a hefty cost to become employed. It has become quite common in my area. You wouldn't necessarily see this in most of Southern Canada, but please, 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 if this is the situation you're in, take the time to keep your records. Talk to your tax provider. Get this part done right, because the CCA on your vehicle can totally save you. So I'm not going to pull it in. Let's just go through here. So passenger vehicles are class 10.1, just so you know, and passenger vehicle almost certainly is what your pickup truck is going to be classed at. So you're not going to like this part, because even tax preparers don't like this, and it's been, according to my wife, a standard joke at PD courses for a long, long time. The CRA decided that a reasonable vehicle for any person doing any kind of work was $30,000. That there was no non-luxury reason to ever spend more than $30,000 a vehicle. And I don't, I'd have to ask the wife when exactly this came in. That might have been even maybe half true at the time it came in, but they have not changed this number in forever. So just be aware of that. That being said, most likely that's going to cap out, and your actual, you're going to put in, you know, a number here like $85,000, but it's going to cap you out at $30,000. But you're still going to get 30% of that $30 is going to come back here into this capital cost allowance line. And the beauty of it is, if you're using a provider with a high-end tax suite, or if you're doing it in some kind of home software preparation method that can retain records year on year, that capital cost will draw itself in. If you have the right software, that capital cost will come back in until it's gone. Right? So it's going to help. It's going to help you pay for your truck. It's going to help make you equal to Terry the taxpayer, who works at the facility across the road, doesn't have to destroy his pickup, doesn't have to buy a pickup. So that's what's going to make you equal. So that, folks, is about all I have to say on where we were going with this today. I'm going to do a bunch more of these videos, as I mentioned, on all of these types of forms. These are the things where your tax picture becomes different. Like I said, if you got one T4 and two RSP slips, I certainly, even though it's not in my best interest to say it that way, I would never advise you. I have nothing. I'd certainly love to do your taxes for you, but I would never advise a single T4 with a couple RSP slips that they needed to pay for tax preparation. It's fine if you do, and we certainly love it when you do, and thank you for the business. But probably, especially if you really pay attention at signing when you're sitting with Christina, and really pay attention at intake when you bring the stuff in, probably, if you listen to everything we do for you this year, probably you can start getting wrong. However, if you're not Terry the taxpayer, you can still learn the things that pertain to your tax picture. I think it's important when you focus on your tax picture that you not allow the chitter chatter that you hear around you to distract you, that you clearly understand that Mary is talking about the expenses that they claim on their 2048 because she's a cattle rancher, right? And George is a rig welder and files on a 2125. That's not going to, none of that means anything on your claim with a 2200. So watch the video again if you need to. Understand that there's nothing in here that's going to make you better than everybody else. This is only about making you equal to the Joe Flatline Terry the taxpayer guy. So that being said, I think I'll do the T2200 with the next 2222, the Northern Residency one next, because it'll be the next easiest one to do before I move on to the two more complicated documents. So thank you so much for your time, and thank you for your patronage. Have a nice day.